It is 9:11 a.m. Pacific Daylight Time. It is the 13th day of June. It's Friday the 13th, and boy, oh boy, is it shaping up to be Friday the 13th for the rest of the world. It is episode 1115 of Bitcoin, and I'm honestly floored that we are now embroiled in the Middle East in open warfare with Iran. I'm just like, I know it's apparently, from what Trump is saying, it's not us, it's just Israel. I get it, but I also don't believe it for one freaking second. Yeah, I mean, it is what it is, and there's not any words that I can formulate and put them in a sentence that will change anything at all as to what's going on. But damn, really? Really? I mean, the whole impetus of this is that Iran was really close to building, getting weapons grade plutonium or uranium or whatever they needed to build their nuclear bomb. Do you have any idea how many times that's been used as an excuse? Everybody is always, all of our supposed enemies are always 2 weeks away from having a nuclear warhead. They've been saying that shit since Iraq. And I'm talking like all the way back to 9/11, which this makes sense that we began this episode at 9:11 a.m. Pacific Daylight Time. It's all so boring, and it's all so criminal, and it's all so really sad. But you're welcome to Friday the 13th, ladies and gentlemen, where the bullshit runs deep, and we're going to get into all of the Bitcoin news that you can use, because that's why you're here for the Bitcoin and podcast. I've got all kinds of weirdness going on, like Charles Hoskinson from Cardano suggesting the outrageous, and Sharplink just getting freaking hammered because they decided to do something really, really stupid. What else are we got to talk about today? Oh, let's see. Oh, the Genius Act apparently is going to be voted on June the 17th, and it is critical for the United States to project our values into the rest of the world. And you know where I'm probably going to go with that one. And then we've got a guy who literally does not understand stablecoins at all. For those of you who really don't like it when I talk about stablecoins, it's because we're going to have to live with them. And we're also going to have to live with people that completely misunderstand what they are. I'm not saying that they're good. I'm not saying that they're bad. What I am saying is that people with power and a shit ton of money that don't understand what they are or how they work are doomed. And maybe, just maybe, we will have a chance to cannibalize them for all of their money and more. And then we're going to end up talking about Coinbase raising their own alarm about this Bitcoin treasury business, and somebody in strategy decided to punch out. Then we're going to talk about Stratum V2, because we finally have some metrics on this software used for mining pools that we've been really wanting forever and ever and ever. And it looks like the preliminary numbers being generated out of Stratum V2 are good. I am really happy about that. And then we have a company that has launched a Bitcoin invoicing tool for plebs. And you know I love the plebs. Let's begin this morning with Cardano's Charles Hoskinson suggesting that he swaps $100 million of ADA, or his shitcoin Cardano, for Bitcoin and stable coins. Did you hear what I said? Charles Hoskinson, the shitcoiner extraordinaire behind Cardano, is wanting to swap $100 million of Cardano that he can print out of thin air, and they do, to buy Bitcoin. So apparently it's not going to be nation states that just print money out of thin air to buy Bitcoin, which they should have already been doing. No. It's going to be Charles Hoskinson, the co-founder of Cardano. He's been floating the idea of converting $100 million worth of ADA tokens into Bitcoin and stablecoins. Quote, we could take $1 million of ADA or ADA, let's just call it ADA, in the treasury, convert it to a blend of stablecoins incumbent in Cardano, so USDM and USDA, and convert some of it into Bitcoin to prime Bitcoin DeFi, Hoskinson said on a YouTube live stream. He then hit back at critics that claimed a $100 million sale would impact the price of ADA, calling them, quote, inexperienced, before adding that the sale would not cause any problems at all. Sorry, I have to laugh. The goal of the sale would be getting the ratio of stablecoin issuance and TVL to around 30% and 40% versus the current, which is roughly 10%. And total value locked on Cardano stands at $356 million, with just $31 million worth of stablecoins minted on chain, DeFi Llama data shows. And Solana, meanwhile, has $9.8 billion in TVL and $11 billion worth of stablecoins minted on chain. So Hoskinson is clearly needing to play catch up, and the only way he can do it is to actually get a hold of Bitcoin. In a tweet, Hoskinson said that the stablecoin situation is, quote, killing Cardano. Pausing here to say, good. I hope you die. And that the proposal would generate, quote, non-inflationary revenue and help build the Cardano DeFi economy, of which one doesn't exist. Hoskinson's comments are at odds with those of Cardano Foundation CEO Frederick Gerard, who told CoinDesk in March that TVL is not a metric that he used in adoption. So boy, oh boy, even the shitcoiners are figuring out that their crap is worthless and that they're going to need to buy Bitcoin. But here's the real problem with that. Charles Hoskinson and the rest of the shitcoiners that are out there can simply print their own money. Yeah, he said he was going to take it out of the treasury that they already have, but that's not going to, it's not like it's not easily replaceable by just spinning up some more ADA, which he will do to replace that which he sold. Effectively just printing crap to buy actual goods and services, or I said goods and services, actual Bitcoin, actually something that actually has value, right? So where is that value going to come from? Where's the true exchange happening? Where does the rubber meet the road on that? The people that think Cardano has value, because they're spending US dollars, which is, yes, fiat, but still, you can still go get, burritos at Taco Bell with actual money. You don't have to finance it. But he's going to use his customer base as a financing tool for buying Bitcoin. This is very, very similar to what Strategy and all these people are doing with the Bitcoin treasury companies. They are literally printing debt to buy Bitcoin, and they are leveraging the people that are hopeful, their investors. Those are the people that are hopeful that this is a good play, a good place to put their money. I'm not saying anything bad technically about the Bitcoin treasury companies. We'll get into some of that later, like I said, but what's the difference? There's still a potential. There's way more potential for Strategy to actually make good on their investors' claim. Well, a lot more than Cardano and Charles Hoskinson. So here we go. Here comes all of the shitcoiners. I'm surprised that they haven't figured it out. And honestly, I feel remiss that I didn't even catch this as a possibility. I know there's other people out there that are way smarter than I, already figured this shit out. It's okay. You come to the truth when you come to the truth, but it's coming, y'all. Cardano and the rest of them they're all going to start just printing their crap, leveraging their client base, which they've basically been, farming for years, and they're going to end up buying the best asset in the world. And it's really too bad. Unless, of course, you're Sharplink Gaming, in fact. I think I said something about this yesterday, but it gets worse. Sharplink Gaming buys $463 million in Ethereum to become the largest Ethereum treasury firm. Now, we've got Bitcoin treasury companies. Well, here comes Sharplink Gaming, and they have now become the largest Ethereum treasury company. Why am I talking so much about shitcoins this morning? Well, because we have to live with them, for one. They're not going away, two. And B, they're going to be here for a lot longer than you think. In fact, they're going to be here forever, because there's always one more rube that thinks that they're going to get in at the bottom. You're already at the bottom in Bitcoin. This is the bottom. It's always the bottom in Bitcoin. You don't really have to chase trading crap. Okay. You don't really have to, try to be a chartalist. You just buy Bitcoin. You just hold Bitcoin. It's easy. But if we go over and I start looking at the chart of Sharplink Gaming, and if you want to follow along later on today, you can go look at the ticker symbol on NASDAQ, SBET, and I am looking at the date that they announced the following. Sharplink Gaming is delighted to share the news that we have completed our $425 million private placement led by Consensus. And if you don't know, Consensus is, well, literally the major foundation. It's not the Ethereum Foundation, but it's the corporate mirror image of that for Ethereum. All right. So that's what Consensus is. So Sharplink Gaming was bankrolled by Consensus at $425 million. Now, they announced that, and their stock price went from $46 a share to a high of $82 a share after that. And then it just started bleeding down. Oh, by the way, this date that they announced that, I forgot to say that, was June 2nd. So, 11 days ago, a week and a half ago, they announced that they got bankrolled by Consensus, the corporation behind Ethereum. And then it just bled off and bled off and bled off until they went all the way down to $30 a share. And then they went down to $22 a share after that in after-hour tradings. And that was yesterday, by the way. These stock prices where they really started to dip happened on yesterday. This morning's open at 6:30 a.m. my time on the NASDAQ. They were flashing a price of $10. Did you hear what I said? So yesterday, at the end of close for Sharplink Gaming, was around $27 to $30, and now they're down to $10. Mind you, this entire discussion is centered around the fact that they are now the largest Ethereum corporate treasury company in the world. If I were to zoom out on this chart, and if I go and I look at it from a monthly standpoint, and I have to look at it monthly, why? Because this company has been around. It started trading in 1997. And it has been nothing but a slow bleed for month over month over month over month. They have never reached their high. Let's see, they entered the market at $13,063. And the reason it's that much is they've had several stock splits since then. Then they actually reached a high of, like in aggregate, if you want to look at it that way, of $23,869 per share. Now, like I said, that's been diluted over time. They've had several stock splits after dilution, but it's been nothing but a slow bleed. And then we get to about May of 2021, and the stock price really starts to crash. And then all of a sudden, in a Hail Mary, they decide to become an Ethereum treasury company. They couldn't even be zombies the right way. even strategy. You might love Michael Saylor and MicroStrategy, Now Strategy, and all the things that they've done and just praise whatever. I see a lot of fanboy shit around Saylor. I like him. I think he's a great. I think he's a great guy. He's fun to listen to. But his company was a zombie company. They were barely really making it along, and then all of a sudden he's like, fuck a bunch of this. In 2020, summer of 2020, he just goes all in into Bitcoin. So far, it's worked for him. Here we have the exact same situation going on, yet in this company's decision-making process, they decided, I don't know, to take 100 hits of acid and go the complete opposite direction. And they're going to pay through the nose for it. Currently, their price is $10.87. It's sad to see, ladies and gentlemen, but that's where we are on this Sharplink deal. So let's just find out more from Andrei Bogonsky out of Decrypt. Sharplink Gaming recently acquired $462 million worth of Ethereum, becoming the asset's largest holder among public firms. The NASDAQ-listed online gambling marketer, which adopted an Ethereum treasury strategy in May, said that it had purchased roughly 176,000 ETH for an average price of $2,600 a coin. The price of Ethereum was recently changing hands at $2,500, which is an 8.8% decrease over the past 24 hours. The company's announcement follows a Securities and Exchange Commission filing that sparked confusion on crypto Twitter as the public tried to parse the significance of a S3 shelf prospectus. Shares tumbled more than 70%. Shares tumbled 70% in after-hours trading on Thursday. Again, ladies and gentlemen, I was kind of telling you about that. Although observers speculated that the filing indicated Sharplink investors had sold shares, Ethereum co-founder, Consensus CEO, and Sharplink board chair Joe Lubin said that the filing was standard. Let's pause. Who bankrolled Sharplink? Consensus, to the tune of $425 million. Who's the co-founder of Consensus and Ethereum, by the way? Joe Lubin. So Joe Lubin got Sharplink bankrolled to $425 million, and Joe Lubin sits on Sharplink's board of directors. This in class, listen up. Eyes forward, please. There's a term that we use. It's called conflict of interest. People can go to jail over this kind of shit. Joe Lubin basically scuttled this company. It's amazing to watch. And you know what's probably going to happen? Nothing. No, I don't. If you were an investor in Sharplink, I feel really bad for you. But Sharplink shares opened at $10.26 on Friday, a 67% dip compared to the stock's closing price of $32.53 just one day before. Shares soared as high as $124 in late May after the company announced a $450 million private placement, and they were recently changing hands at around $11. Quote, there's a period of time between the announcement to when everything is ready to go, where the float is tiny and everyone buys in, and it basically turns into a meme stonk, Taproot Wizards co-founder Udi Wertheimer said on Twitter. Quote, that's resolved once all the filings are done. It doesn't mean anyone rugged. So it looks like Udi Wertheimer, good to his word, is, defending these actions by this stupid ass company. Anyway, Sharplink said, as of Friday, over 95% of the company's Ethereum holdings have been deployed in staking and liquid staking solutions, contributing to Ethereum network security and generating yield. It better generate a lot, dude. Among liquid staking protocols, Lido is the most popular. Bitcoin treasury firms, which have soared in popularity this year, are not able to earn yield on their holdings by leveraging Bitcoin's network. The difference in terms of staking can be attributed to the network's different consensus models. Oh, it's so much worse than that. They're trying to defend this shit, and it is an indefensible position. If I were the shareholders, of Sharplink, I would already be planning a class action lawsuit against all of the board of directors and anybody even fucking remotely connected to Sharplink and this entire debacle. It has completely destroyed whatever was left of this company, and there wasn't much. But if you were a shareholder, this is the impropriety here is absolutely freaking eye-watering. Absolutely eye-watering. Now, let's move over to the Genius Act. This is interesting. I really am interested in hearing what this one has to say. It's written by Kristen Smith, where she says that America's dollar dominance depends on the Genius Act. Okay. We are closer than ever to cementing America's global leadership in digital asset innovation, and next week, the Senate will hold its final vote on the Guiding and Establishing National Innovation for U.S. Stablecoins Act, or the Genius Act, bringing this landmark stablecoin legislation just one step closer to becoming law. Following Senate passage, the bill will advance to the House for consideration. This marks a significant step forward, not just for the crypto industry, but for the American consumer, investors, and the global strength of the United States dollar. The numbers tell the story. Today, more than $190 billion in dollar-backed stablecoins are in circulation worldwide, doubling annually. Stablecoins aren't speculative crypto assets. They are digital dollars that enable instant, low-cost transactions anywhere in the world. In regions facing currency devaluation or authoritarian financial controls, stablecoins provide access to the economic stability of the United States dollar. Not only is this pro-innovation, it's pro-democracy. I gotta pause. I gotta do it. What would be the best way to destabilize everything but the United States and possibly Western Europe? A fuck ton of wars. Oh, you might be shocked that I might say that we might start some wars to completely destroy what's left of everybody's ridiculously worthless fiat currencies that you think we're bad at managing. Oh my God, what the hell's going on completely in the Middle East, right? Drive tensions worldwide up to the point where everybody starts freaking out. And all of a sudden, fiat currencies, which are already very, very weak to begin with, start to really get hammered. And who comes in to save the day? The United States and democracy. Now, for those of you who think that I'm anti-United States, I'm not. I live here. It's not the United States that I have a problem with. It's the federal government of the United States. It seems to me that it's been handed over to criminals, thieves, and mafia types. Hey, this is like fucking organized crime over here, y'all. And if you don't think that nobody's stopping them, so they're just going to get emboldened. They've been that way for decades and decades and decades. Of course they're going to do this. So it wasn't just about my thesis of exporting United States debt to the rest of the world to destroy them. No, there's another prong to this now. You just start wars and really ramp up the situation where you need this tool, these stable coins, because of the people. They need it. Their currency. The poor people and their currency are being devalued. Oh my God. Well, luckily the United States has Tether and of course USDC, where we can export an infinite amount of debt to the rest of the world before the shockwave of dumping that much liquid cash on the rest of the world comes back to cover us over in a tsunami of debt. Let's continue. The Genius Act provides the clarity the industry urgently needs. By establishing sensible guidelines, it ensures stablecoins maintains stable value through high-quality liquid reserves, regular audits, and clear redemption rights. These aren't excessive burdens. They're reasonable protections already practiced by responsible issuers. Oh my God, they're using AI to write this. How can I tell? This sentence. These aren't excessive burdens. They're reasonable protections already practiced by responsible issuers. Remember what I was saying yesterday? These aren't X. They're X plus 1. Man, that's a telltale sign that some of this was written by AI. More importantly, continuing on, What the Genius Act provides is certainty, allowing responsible innovation to flourish while preventing bad actors from undermining the system. Passing Genius can't wait. As other nations develop central bank digital currencies and alternative payment systems designed to circumvent dollar dominance, the United States faces a choice. Embrace the innovation that's already spreading dollars globally, or cede this ground to other countries. The legislation provides the framework we need, which is strong reserve requirements, transparency rules, and consumer protections without stifling the innovation that makes these stablecoins so powerful. Progress on stablecoin legislation has been bipartisan, reflecting a growing recognition across the political spectrum that this technology serves American interests. Republicans see free market innovation and reduced government intervention bullshit. Democrats value the financial inclusion and consumer protection aspects bullshit. Both parties understand that maintaining dollar supremacy isn't partisan. It's patriotic. Again, AI. Both parties understand that maintaining dollar supremacy isn't partisan. It's patriotic. It's not X, it's X plus one. Globally, stablecoins are already making a profound difference. In Argentina, where inflation has exceeded 100% of residents, or rather, where inflation has exceeded 100%, residents use dollar stablecoins to preserve their savings. And in Ukraine, oh my God, let's bring up Ukraine. Humanitarian organizations have used them to deliver aid instantly when traditional banking channels have failed. Across Africa and Southeast Asia, entrepreneurs have access to dollar liquidity and can build businesses that connect to the global economy. Each transaction strengthens the dollar's role as the world's reserve currency. The technology community knows what's on the line. Oh, we're all going to die if we don't do this. That's why companies of all sizes, from traditional financial institutions to Silicon Valley startups, want clarity around stablecoins. They're not asking for light touch regulation or special treatment. They're asking for clear rules that allow them to build in America, serve American interests, and extend American financial leadership globally. It's a global force for good, ladies and gentlemen. It's like the Navy, right? It's a global force for good. Meanwhile, every month that goes by, more stablecoin activity moves offshore, where innovation happens outside our borders and more ground is ceded to competitors. The European Union has already implemented stablecoin guidelines. Singapore, for the love of God, the UAE, oh crap, and others are rolling out entire frameworks to attract this activity. Dollar-backed stablecoins don't compete with the Federal Reserve. Bullshit. They extend its reach. Well, that's absolutely fucking true. They don't undermine American banking. They do. They create new customers for it. Yeah, they also create completely new banking people that are going to do the same shit that the old bankers did in the past. Anyway, they don't weaken financial oversight. They make it more effective through programmable compliance and real-time transparencies. Stablecoins are foundational infrastructure, not ideology. Passing the Genius Act requires no vast expenditures or bureaucratic complexity. It simply offers clear rules for American innovation to thrive, safeguards consumers, and fortifies the dollar's global influence. The message to Congress is clear. Don't let this moment pass. The world won't pause while America deliberates. With the Genius Act, we can ensure that the future of global finance remains dollar-dominated, or denominated, either way, governed by American values, empowered by our unmatched American ingenuity. All right. All right. Wow. I'm just saying, wow. I want to see something here. Oh my God. She really with the Solana Policy Institute? I think she is. Let's see. Let me go and look at something else. It may just be a matching name. Yep, no, she's Solana. Former CEO of Blockchain Association. She says KM Smith DC on her Twitter handle, so I can only assume that that means she's firmly in place in the District of Columbia, which, if you're not a United States citizen, that's Washington, D.C., and you probably know what that is. Wow. I never thought I'd be this right. This is where it's going. This is what we're going to do. We're going to export dollars in the form of stablecoin to every country on the face of the planet. Then we're going to find out that there's just not enough, and the only way that we can get more stablecoin, dollar-denominated stablecoins out into the market is to print U.S. Treasury bonds, U.S. Treasury bills, and then sell them to Tether, and then they will spin up more Tether, and then they will export that debt. It'll be an instant monetization of the debt. We won't wait. It'll be instantaneous. We've never really had that before. Usually there's some float time between when the debt is printed as a treasury instrument and when the Federal Reserve prints money to actually buy that debt. That's when you monetize debt. This time, it's going to be immediate. We're going to sell it directly to a non-federal agency, which is going to be Tether and probably USDC at this point. It is going to be instantly monetized and instantly transported to the four winds, bro. Eventually, those chickens are going to come home to roost, but it could be 10 years. They have discovered the best possible way to kick the can down the road. I still believe Bitcoin is going to benefit greatly from this. I mean, I wish it wouldn't, because it's going to hurt a lot of people along the way, but it is what it is. It just makes you feel dirty, doesn't it? Well, get clean with SoapMiner at SoapMiner.com. He makes handmade 100% beef tallow soap, and it's awesome. I've been using the same bar of soap, and my wife and my two kids, for like a month, and we're just now getting down to the nubs of that bar of soap. And I've got two others. Actually, I take that back. We've got his lavender tallow soap in the shower, which we use. And then we've got the regular unscented, just plain Jane, 100% tallow, lye, and distilled water. That's like hand soap. I've got like pine tar soap and a peppermint soap that I have not even had to use yet. And I've still got most of the lavender soap in the shower. This is like people who like, I'm not going to pay this much money for this bar of soap. Yeah, really? Dude, not only is it clean ingredients that gets you clean, it lasts a long time. It lasts longer than any $2 bar of Irish Spring that I've ever used. And have you ever looked at the ingredient list from a bar of soap you get from Walmart? It'll scare the piss out of you. If you want high integrity soap, go to SoapMiner.com. That's SoapMiner.com. He's got Earl Grey tallow soap. He's got Fresh Breeze. He's got Goat's Milk tallow soap, which he's just released, by the way. Lemongrass, Orange Clove, which is orange and clove. He's got the Rough Cut tallow soap, which is my favorite. He's got tea tree. He's got pine tar. He's got cedar wood. He's got peppermint tallow. He's got lavender, which I told you about. And it looks like he is trying out a couple of new products, which are not soap. He's got tallow lip balm, 5-ounce tin for $4. He's got one in unscented, and he's got another one in peppermint. They are both $4 for a 1/2-ounce tin. And I have not seen those yet, but I am here to tell you, because I do use these soaps every single day. I wash my hair with these soaps. I shave with these soaps. I get all of the shitcoin scum off of my body with these soaps. I am clean as a whistle, and you can tell when you use SoapMiner soaps. If you need to exit the dirty, filthy crap of the world, then go to SoapMiner.com and use Bitcoin and for what have I got with him? I just want to make sure that I'm not lying here. Yeah. Use Bitcoin and in the cart's coupon code box for 10% off of your total purchase. This is the Circle P. When you support SoapMiner, SoapMiner is able to support me so that I can support you. It is the very beginnings. It is the nascent. It is Terra Nova of a Bitcoin circular economy. Because when you buy his soap and you use Bitcoin, and SoapMiner knows that you, or rather I made the sale to you, and then he gets to make the determination as to how much that sale was worth to him, and then he pays me in Satoshis. That way I can continue bringing this show to you on a daily basis so that I can warn you about shit like this. From Decrypt and Liz Napolitano, billionaire investor calls no interest stablecoins outrageous as key U.S. bill advances. It's outrageous that a dollar-backed, dollar-pegged stablecoin doesn't generate interest. This is what I was talking about at the top of the show. Talking about a billionaire that doesn't understand the mechanism of what's at play here. Let's get into it. Philippe Lafont on Thursday called the idea of a non-yielding stablecoin outrageous. It sounds like he's mad. As U.S. lawmakers advance a bill that would bar issuers from offering interest-bearing dollar-pegged tokens. Quote, how in the world is a stablecoin not bearing interest? This is outrageous, and that needs to be solved, Lafont said at Coinbase's State of Crypto event in New York. It's laughable people. I wonder if he wore clown shoes to this one. Lafont, founder of hedge fund Coutu Management, which oversees about $60 billion in assets, argued that stablecoins should deliver passive income through simple contracts paying users the spot rate. The approval of yield-bearing stablecoins has become a flashpoint between crypto lobbyists, banks, and regulators. Draft legislation, including the Genius Act, is being heavily lobbied by the industry to allow such tokens. Coinbase CEO Brian Armstrong publicly appealed to lawmakers in March to include yield-bearing provisions. Quote, why is it that when you put money in the stablecoin, you get rewards? Just make it a simple contract. Lafont said Thursday, adding that stablecoins offer just so many use cases, including flexible yield products. Crypto firms have pushed for months to win approval for interest-generating stablecoins, but financial regulators argue they could encourage consumers to pull funds from tightly regulated institutions, you read that as the Dow Jones, and place them with riskier crypto platforms. Yeah, if that were to happen, you would degrade legacy financial markets. They don't want that because it's scary. It's like that's where the real rubber meets the road on the shift to digital economies, full digital tokenship, full use of digital things like Bitcoin. Now, I don't think anybody should use anything other than Bitcoin, but people are going to use Tether. No way around it. Don't use shitcoins, okay? Just at least do that for me. Just don't use shitcoins. But it's going to come to a head where people around the world, and not just United States investors, start pulling their money out of the legacy markets and go into this brand new market. That's the conversion. That's the transition. And that is what is causing the most fear from people like the World Bank, the IMF, Christine Lagarde, Augustin Carstens. Our own people here at home, like Elizabeth Warren. She is so in the bankers' pockets that it's not even funny. This is a terrifying prospect, and we're almost there. We are almost there. The debate escalated this spring as lawmakers advanced the Genius Act, which aims to establish regulatory stablecoin framework, and by late spring, a clause banning yield-bearing tokens had gained momentum, casting uncertainty on the industry's efforts. Stablecoin adoption has surged over the past year. Yeah, and then they give examples of who the hell's using it. And we already know who's using it. Everybody that is having their fiat currencies completely destabilized or has already been destabilized. But it's okay. If you've got a fiat currency that's not destabilized yet, you're in an Eastern European country, and your kroner or whatever is not terrible. You just wait. We'll make sure that shit happens because we've got to express democracy over across the entire globe. And the way we're going to do it is, well, we're going to print money, we're going to start wars, we're going to monetize debt, and we're going to send it and ship it out to everywhere that is not the continental United States, Alaska, Hawaii, or Guam, or any of our actual territories. Everybody else, though, you can go get fucked. That's the way this is going to work. Hey, let's run the numbers. God have mercy. West Texas Intermediate oil has gained 6 percentage points to clock in at $72.17. Brent North Sea up 5.93% to $73.47. Natural gas is up 1.6% to $3.54 per 1,000 cubic feet. Gasoline is up 3.5 points, crossing the $2.20 mark per gallon. Gold doing very well, 1.3% to the upside, coming in at $3,448.02. Silver is up 0.1%, but platinum has lost 5%. Copper is down 0.5%. Palladium down 1.5%. Ag is actually mostly green today. The biggest loser is chocolate, 2.6% to the downside. The biggest winner is wheat, 3% to the upside. Meanwhile, live cattle is down 1 1/3. Lean hogs are down 1/3, and feeder cattle are down almost a full point. The Dow and the rest of the legacy markets are choking on their own vomit right now. 1.15% downside for the Dow. That's a 500-point loss this morning. If you knew it was going to happen, because you don't go to war without somebody, crashing the market so they can buy back in cheap. They know what's coming. S&P is down 0.5 point. NASDAQ is down 0.5 point, and the S&P Mini is down 0.75%. Meanwhile, Bitcoin coming back, man, $105,580. It dipped down to like a little bit below 104. I think it was at 103,500 sometime last night after the bombs started raining down upon Iranians. Anyway, good Lord have mercy. We've got a $2.1 trillion market cap. You can get 30.5 ounces of shiny metal rocks with your 1 Bitcoin, of which there are 19,878,247.71 of, and average fees per block are low, 0.04 BTC taken in fees on a per block basis. There are 5 blocks carrying 6,000 transactions waiting to clear at high priority rates of 3, and low priority is also going to get you in at 3 Satoshis per VByte. Meanwhile, we've got a huge spike in hash rate. Ladies and gentlemen, 950 exahashes per second. It was at 918 yesterday. Just saying. Oh, by the way, as a reminder, go to bitcoinandshow.com. That's bitcoinandshow.com. Just sign up for the email. Help me build a customer base with this website. I promise. I know it's like, I'm a one-man show and I haven't been able to actually get into any articles yet, but I am posting the daily show to the website. If you want to get notified and help me out with some traffic, sign up at bitcoinandshow.com. I don't release your email. I don't sell it. I don't give it away. I don't tell anybody anything. It's just between me, you, and the fence post from, oh man, what was the day? Oh, FSB needs a Xanax. Yes, the FSB definitely needs to calm down. Yesterday's show of Bitcoin and I got progressively worse with a row of sticks that says LFG. Side Duck with 716 says Side Duck. Yodel with 511 says, how many times was he set on fire? If some of the time the kidnappers put it out with urine, LOL. Paul Surnine 500 says, thanks again, my friend, and keep up the good work. It really is high time to pull the trigger. Turkey with 500 said nothing again. It's like me and Turkey are at war. I keep trying to get him to say something. He never says anything. But hey, I'll take your 500 sats. Perminer with 210 says, win Lambo, win hookers, win crack. With another 210, that's coming up 3 times. Wow, in my fountain.fm page, it's like that same thing has come up 3 times. I don't know if they're copies or if he really gave me 630 sats. Hopefully it was the latter. That's the weather report. Well, here we all are at the second part of the show. Welcome to the second part of the news that you can use. Coinbase sees bullish crypto outlook for 2025, but flags systemic risks from leveraged corporate Bitcoin bets. They're talking about Bitcoin treasury companies. James Hunt from The Block. Crypto markets are set for a constructive second half of 2025, underpinned by improved U.S. economic growth expectations, potential Fed rate cuts. Yeah, wait a long time for that one. Rising corporate treasury adoption and greater regulatory clarity, according to Coinbase Institutional. While risks remain, including a steepening yield curve and, of course, potential forced selling pressure from publicly traded crypto vehicles, these appear manageable for now, according to David Duong, Coinbase Institutional's global head of research, and he wrote it in a report on Thursday. Duong continues to expect more upside in the crypto market over the next 3 months, forecasting a new all-time high for Bitcoin in the second half of the year as macro disruption from tariffs fades. However, rising long-term yields driven by concerns about deficits could tighten financial conditions and unsettle markets. Yay. But a growing number of public companies are embracing Bitcoin-backed balance sheets, with 228 firms now holding a combined 820,000 BTC. And according to Galaxy Digital, around 20 of these, along with several other holding other shitcoins, are using a leveraged funding model pioneered by, you guessed it, Strategy. This surge in activity follows a key accounting shift that went into effect in December of 2024, when new Financial Accounting Standards Board's rules allowed companies to report crypto holdings at fair market value. While corporate adoption is rising, Duong warned that the emergence of publicly traded crypto vehicles focused solely on asset accumulation as their primary goal introduces, quote, systemic risks. Many of these firms raised capital through convertible debt to buy crypto, leaving them vulnerable to forced selling during market stress or motivated discretionary selling that could spook investors. He noted, quote, ultimately, we think it's unlikely that the downside pressure posed by either risk would mirror what we've seen with some of the failed crypto industry projects in the past. First, most of the debt from these entities will ultimately not mature until late 2029 to early 2030, based on our inventory of outstanding debt across 9 entities, suggesting forced selling pressure is not a concern in the very short term. Moreover, so long as loan to value, or LTV ratios, stay reasonable, we believe that the largest companies are likely to have access to refinancing methods that may help them navigate the situation without necessarily liquidating the reserve holdings. However, the outlook could change as debts mature or more firms adopt leverage strategies, Duong acknowledged. With no standard funding model in place, tracking risk is challenging, but corporate interest remains high, and market saturation has not yet been reached. Pausing just to ask the question, how do you know? What metric are you using? Anyway. Hence, the accumulation trend still has room to grow in the second half of 2025. So even Coinbase is starting to raise some red flags. So the question becomes, is this a narrative that's being promulgated by mainstream quote-unquote crypto media, or is this an actual organic concern? And it's kind of hard to tell, but I'll tell you what my gut says, it's an organic concern. And only because we've never seen anything like this before. We've never seen anything even remotely approaching what this thing looks like. So clearly there's going to be some fear, some real fear, uncertainty, and doubt. There's only one way to move here, ladies and gentlemen, and that is forward. Well, unless you're one of the strategy directors who maybe he read the article from Coinbase and decided to just punch out, because strategy director liquidates 100% of his strategy shares. This is Atlas 21, by the way. Carl Rickerson, or Rickert? Yeah, Rickertson, completely exited his position in strategy as insiders sell $864 million worth of stock. As reported by Carl Rickertson, a member of Strategy's board of directors has fully liquidated his entire shareholding for over $10 million. Rickertson's decision to completely exit his strategy position marks a sharp shift from his previous investment stance. In 2022, the executive had shown confidence in the company by investing $700,000 in strategy shares. On June the 13th, 2022, Rickertson purchased $608,000 worth of MSTR stock at $152 per share. Since then, the stock has rallied 152%. However, by 2023, the director had already sold half of his 4,000 share position. Rickertson's approach to managing his holdings has become increasingly aggressive in recent years. Since joining the board in 2019, he has adopted a strategy of immediately liquidating any stock options received. One example of this tactic occurred on June the 2nd when he acquired and then sold 26,390 strategy shares on the very same day. As of June 5th this year, Rickertson reported zero vested strategy shares, marking the end of his equity involvement with the company. Rickertson's situation is not an isolated case within the company's strategy. Data from the Securities and Exchange Commission reveals a controversial picture. According to information gathered by secform4.com, over the past 5 years, total insider sales have exceeded purchases by $864 million. This imbalance in insider transactions could raise questions about executives' confidence in the company's future. I'm not privy to how any particular company handles their board of directors. But if I was CEO of a company that had a board of directors and I saw this kind of activity from one of my directors, that motherfucker goes out the door. I'm sorry. Even if he's completely correct, it sends a bad message to the rest of the world. This is a bad message for strategy. You got insiders in strategy basically selling out. Yes, I've told you on several occasions that strategy has always been, well, not always been, but for the last few years anyway, essentially a zombie company whose Hail Mary of buying Bitcoin has actually worked in the company's favor. But if I really believe the way Saylor believes, if I'm Michael Saylor and I'm watching this entire thing, my attitude would probably be like, look, we were never going to be able to continue to compete with Oracle and SAS as business intelligence software producers. We had to do this. We didn't have anything else in the pipe. We don't build rocket engines. We don't build jet ski boats. We don't build any of this crap. Our one product is basically everybody uses Oracle and SAS. That's what people use. They don't use strategy stuff. So of course they were going to do this. It's worked. So if I'm Michael Strategy, if I'm Michael Saylor, I'm like, it worked. Now we can do something else. And then I have to look at my board of directors basically saying, I have zero confidence. I've got other executives in my company says that it's clearly telegraphing, I don't have much confidence. Well, then it's time to clean some house, Saylor. I mean, again, I'm not fanboying Saylor here. I'm just saying that if this was my company, I would be cleaning house of people that showed publicly no confidence in me or the company. It's not that hard. This is not that hard. I mean, it's like, are they correct? Maybe. Is that what I'm getting at here? No. This is the public perception of your company, which is going to feed into to potential investors' thoughts about your company. And if for whatever reason they start seeing people jump ship, they're not going to have that much confidence in your company, and they may very well sell their shares too. And you don't want that. I I expect at one point or another there to be some fairly serious house cleaning over its strategy. If they don't, it's going to cause larger problems. But let's move on to the Stratum V2. Apparently, Stratum V2 increases profits by 7.4%. This is out of Atlas 21, by the way. The new study conducted by Hash Labs in collaboration with the SRI, or Stratum V2 Reference Implementation Team, and figures like Matt Corallo, Alejandro de la Torre, and others reveal how the Stratum V2 protocol can increase miner profitability compared to the Stratum V1 standard that has been in place for over a decade. Speaking at Atlas 21, Gabriel Vernetti, Stratum V2 maintainer, declared, or speaking to Atlas 21, quote, "This is the first case study that demonstrates how much Stratum V2 can help miners as well, securing and increasing their profits in addition to the rest of the network. It's just a first study aimed at demonstrating how decentralization can be aligned with the profit dynamics typical of the mining sector. In the future, we will focus on the benefits for mining pool operators who can benefit from the protocol's efficiency to lower their operating costs. The feedback has been very positive, and this first study was a joint work with various market players, including miners and mining pool operators. As SRI, we want to continue working together with the entire community that has done in this case, becoming a reference point for all actors interested in innovating the Bitcoin mining field." And that was a long quote, but that's the end of it. The research, based on controlled tests with two identical ASIC S19K Pros with stock firmware, demonstrates that Stratum V2 can increase net profits by up to 7.4%. For an industry that often operates with 10% margins, this could represent a substantial competitive advantage. The V2 protocol reduces various inefficiencies that plague the current system: the latency in block switching, that is, the waiting time created when a miner must change block templates after a new block has been mined on the network, goes from 325 milliseconds to just 1.4 millisecond. Wow. A speed 228 times higher. This translates to about 4.9 hours of completely wasted hash power less every year. Another problem of modern mining concerns state shares, a proof of work that aims, or rather arrives too late to be remunerated, often due to network latency or inefficient communication. However, not all stale shares, was it stale? Yeah, sorry, not state shares, stale shares. Not all stale shares depend on inefficiency problems. On average, about 2% are rejected for expected reasons, such as when the share doesn't reach the minimum difficulty required by the pool. And this value is considered normal in the sector. The remaining 98% instead is caused by avoidable delays. With Stratum V1, miners lose between 0.1 and 0.2% of their compute power, and Stratum V2 with job declaration completely eliminates this waste, provided that the miner and the pool node have the same level of connectivity. This step could translate into a net profit increase of up to 2% by fully adopting Stratum V2 with job declaration. So, what is it? What did they say? What the hell was it? 7.4% profit increase on an industry that only has 10% margins. This may very well be the number that everybody was waiting for in the mining industry sector to jump into Stratum V2. So I think what's going to happen here is you're going to see huge miners start really testing Stratum V2 hard, and I'll bet you by the end of the year, we see 60% of all mining being done on the Stratum V2 system. And this is good. I like Stratum V2. I like everything that I've read about it. I've listened to multiple hours of podcast about the technicalities of this thing. It makes a lot of sense, and it especially puts a lot of power in the hands of individual miners that are really small players, and not allow one massive mining pool to dictate to all the miners in that pool what the template is going to be. Because Stratum V2 allows each individual miner to not only go to whatever pool they want damn near instantaneously, but you can pick your own mining template. And this is good for the industry. Now, finally today, Flash launches a free Bitcoin invoicing tool. I like free. This is by Leon out of Lightning News. Flash, the all-in-one Bitcoin payment platform, just launched Flash invoicing, the first invoicing tool for Bitcoin that is completely free and non-custodial. It's KYC free and fully integrated into a professional-grade business suite. Freelancers, contractors, and independent workers can now send professional Bitcoin invoices with 0% platform fees, no identity verification, and no third-party custody, a first in the Bitcoin ecosystem. And according to Deal, DEEL, crypto payments to freelancers grew 10x in 2023, with Bitcoin remaining the most used currency. But despite this surge, the tools available for invoicing remain outdated. Most freelancers still paste Bitcoin addresses into PDF footers or emails, hoping their clients send the right amount. Others use custodial platforms that charge high fees and require full identity verification. Quote, "We've seen too many people paste BTC addresses into documents and call it invoicing," said Pierre Corbin, CEO of Flash. Quote, "It's messy, reduces privacy, and is very inconvenient both for the payee and the payer," he explained. Most Bitcoin invoicing tools charge a percentage per transaction or lock users into subscription plans. That means freelancers lose a portion of every invoice just for the privilege of getting paid. The other option is host open source invoicing tools or use a Google Sheet template. While the former requires a hardware investment, the latter lacks functionality. Flash invoicing is aiming to provide a better solution to address the invoicing needs for modern businesses and freelancers. Quote, "Freelancers work hard enough. The last thing that they need is a platform skimming off of their earnings," said Pierre. Quote, "That's why we've dropped our fee from 1.5% to 0% and launched the first invoicing tool that's truly free without compromising on privacy or control. As a freelancer myself, I love using the Flash invoicing feature. It keeps all of my clients in one place, allows me to easily edit invoices and track payments, much more professional than sending a Lightning address in the footer of a PDF invoice. Whether you're a solo designer in Nairobi, a Web3 developer in Buenos Aires, or a consultant billing startups in Berlin, Flash invoicing gives you a way to accept Bitcoin without giving up control, privacy, or revenue. And because it's fully integrated with the broader Flash suite, freelancers can easily scale from invoicing to setting up stores, receiving donations, and gating premium content. So, Flash seems to be a non-custodial KYC-free Bitcoin payment platform that's built for all these people that they talk about. I've never actually heard of Flash. I may have, and I'm just like misplacing that memory or something like that. But you always need to ask yourself the question: if it's free, how do you generate revenue so that you can pay your bills? They got to pay their people. People have to eat. I mean, you always need to see that. No matter who's doing what, where, you've got to pay for electricity unless you want to, I don't know, freeze to death. You got to pay for food if you don't want to starve to death. You got to, there's shit people have to pay for. So when you get a service that says we don't charge anything, it's always prudent to ask the question, then how are you feeding yourself? What is it that you're doing for me that's generating you money so that you can go eat? Not buy a Learjet, not get the Lambo, not be rich as snot. No, just eating, right? So it's not that I immediately discount this Flash announcement. And it's not that I think that they're doing evil. I don't know. I have no idea. But I do like this notion of invoicing for plebs. I really like Zaprite, but they charge a fee. And like for me, I don't make enough money on this show to eat the fees on that. If I did, you damn right, I would be using Zaprite all the time. I love that tool, but they charge a fee. And right now, it's just not something that I'm interested in at that price versus my revenue, which is not much. This show is a labor of love. It's certainly not buying me any Lambos or football teams. That's for damn sure. That said, I might look into this. I really might check this out. I really want a way, because the thing with the Circle P is that a lot of people really like the concept, but it is kludgy. And there's no real way for me to invoice the people that are in the Circle P, because it's up to them to pay me what they think they owe me if and only if I made a sale. And there's no way to track these metrics, not only from my side, but from the Circle P vendor side. And one of the things that Circle P is not supposed to do is create more work for the vendor. They've got enough shit going on. That's one of the whole pieces of that pie. And what I've been looking for is, how would I leverage the concept of invoicing inside the Circle P for myself and my vendors to keep track of what's going on without creating a mess? Maybe Flash would work. Maybe I'd figure out a way to leverage it to do something like that. I've always wanted a situation where, like, there was like two, like, let's call it this way. Just envision this. What if on Nostr there was two buttons, one for a Zap and one for a Zap invoice? The Zap invoice button, somebody like SoapMiner, if you're going to go buy some soap from SoapMiner today, and please do, that way we could maybe test this. SoapMiner says, "Hey, I got 10 separate sales from the Circle P today. I need to send NunyaBidness some money. I need to send some money back over to the Bitcoin and podcast." And he decides that he wants to use the invoice zapping button on Nostr that's on my profile in Nostr. And then it just basically hits the button and it says, "How much do you want to pay him?" And then there's like maybe two other lines of information. And he can say, "You made 10 sales" in one of the information lines, or something else, just something for me and him to keep track of it. And then when he hits the button, not only do I get paid directly to my Lightning node, because that's my address that is inside the embedded button, but I get, I don't know, maybe a direct message in Nostr, or maybe I've got it set up where it emails me, or some other way that I get a hard copy of that invoice that I can use for whatever purposes I want to use it for. And SoapMiner gets a copy of the exact same invoice sent to wherever the hell SoapMiner wants to sell it to or send it to, so that SoapMiner can do with whatever the hell he wants to do with that copy of the invoice. That's what I'm looking for, and it does not exist. So if there's anybody out there that would like to code that up or take a stab at maybe vibe coding, that would be an interesting Nostr button to have. It would also, honestly, it doesn't even have to just be a Nostr button. What if it was a button that I could embed on the Circle P website, so that all SoapMiner would have to do is go to the Circle P website, click it, and click the button that says, pay invoice. And then he gets to decide what that invoice is all about, how much sats are in there, what it's for. The date would automatically be timestamped, so he wouldn't even have to do that. The time of day would automatically be timestamped, so he wouldn't have to do that. Hits the button, puts in the like 2 or 3 pieces of information, and boom, he's generated himself a payment invoice, and I've got myself the same payment invoice. It would be really useful to have this as just an embedded button. And we could do it for Nostr, we could do it for websites, we could do it for all kinds of cool shit. But if something like Flash was on the back end powering that, Dude, that would literally solve my problem. The only thing I would have to do is get my Circle P vendors to actually use it. There's always going to be a catch. Maybe I'll figure it out. And if I do, I'll tell you about it when I see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.